I think that's a huge point that a lot of people miss too, is that yes, you might be able to do some of those tasks that you don't want to do, but what it really does is it drains the energy out of you for the things that you're best at. So not only is it taking away your time, it starts to erode at your passion. And if you're passionate
Mm.
about what you do, man, you never want to let that go because that really is the driver to scalability and success.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey everyone, welcome to the Real Estate Pros Podcast. I'm your host, Micah Johnson, and today I'm speaking with Dennis, who's been making some serious moves in the commercial real estate space for quite some time now. Dennis, welcome in, man. Glad to have you.
Thanks, Mike. I appreciate it.
Absolutely, man. I'm excited for our talk today. I think our listeners are really going to take something away from, one, your journey through real estate and the expertise that you have now that you've moved into the current place that you're in. So let's dive in on that. For the folks that may not know you yet, what's your main focus right now and what markets do you operate in?
Yeah. So I started a private real estate company called Sentinel Net Lease. That was in late 2019. And our primary focus is net lease assets in office, industrial, and retail, and only single tenants. And our portfolio right now is about 25 properties across 16 different states.
Okay. Awesome, man. So y'all are expanding out there. So let's take a quick step back. So you said you opened up your own firm in 2019. What led to that firm getting opened up?
Well, I am a career real estate investment and development professional. So I started my career as a housing market analyst, worked my way up the corporate ladder for 20 years. My goal was always to be a CEO of a big real estate investment firm. I did that, and I realized it kind of sucked. You're not really still the boss, even though you have the title. You have a board of directors, you have shareholders, you have a lot of people that will constrain your decision making. And I really thought that was the end goal. And once I was there, I was like, this is not the mountaintop I'm supposed to be on. And so in 2018, I launched a different investment firm focused on the build for rent sector.
Okay.
Had a successful exit there. And, as probably a lot of your listeners know, you get that entrepreneurial bug, you kind of can't stop. So I launched this other platform like a year and a half after the other one. And it's been great ever since. I love it.
And the CEO was let loose. That's what happened. That guy that was always wanting out, he found that clean air and boom, he's running.
That's it. It
So
is amazing for those people that struggle in their workplace at times, but know that they're a high quality individual. They really have that room to run once you become an entrepreneur. It's risky, but it's so much more rewarding if it goes right.
And what I like about your story, it's not the most common one, right? We were talking about a little bit pre-recording. A lot of folks kind of stumble their way into a bigger real estate investment company, where yours was designed in a way where, okay, I'm going to go into something that's already happening. It's already, I don't need to reinvent the wheel. Let me join, let me climb. And you made it, right? You got to that top part to realize, okay, this isn't what I want. However, that 20 years of experience had allowed you this. You were already running with the train to jump on. Like, you didn't have to get up to speed. You just boom, jump tracks, and now we're off and running. How was that? What was the value in that when you got into these new ventures?
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
So it really was a tale of two stories. So, I had my peers in the space when I told them I was thinking about going and doing my own thing, like, well, buddy, you should have done that 5 years ago. You know what you're doing. And then once I did it, I was like, okay, great. I really understand my investment thesis. I know how to raise money. I know how to speak to different investors. Where I realized that I had a weak spot was my whole career, I had other employees filling those gaps of talent that I didn't have. So accounting, HR, compliance, legal, I always had this support system around me. And all of a sudden I realized everything's on my shoulders and I'm wearing a bunch of different hats. And man, it was a steep learning curve on that front, because I think for a lot of a lot of entrepreneurs, you feel that burden and you try to take it all on yourself. And for me, within probably 90 days, I was like, oh, I am my own worst enemy here. Like, I would
Mm.
never hire myself as an accountant. Um, so why am I doing this? Right. So I really made a hard pivot to bring in a support group of third-party vendors and even bringing in some employees to really help me with the back office and infrastructure so I could do what I do best. Like, I'm an investment guy, I'm an acquisitions guy, I'm a capital markets guy. Don't let me run our legal department. I'm not our risk management department. So getting those other people in there to provide the right infrastructure allowed me to grow the firm a lot quicker. And I think that's something a lot of entrepreneurs will struggle with, especially if they're on a shoestring budget initially. But I can tell you, from my own experience, it pays to spend a little bit extra to have the right people around you.
I couldn't agree more, man, because you're positioning yourself to do your strength activity more, which is your moneymaker. How many hours per day can your focus be on the things that create that bottom line revenue versus the part that you feel like you got to struggle through? Because I think you're right. A lot of folks, they misinterpret the word entrepreneur and solopreneur. You can do it all by yourself, but there are very specific style of businesses that you do all by yourself. It's a unique personality type, and you're still hiring VAs and things like that. So it's not completely
Yeah.
solopreneur versus that entrepreneur. You're building something bigger. You actually, one thing I noticed really about high level entrepreneurs, you have the CEO mentality. You are a visionary. That is what you do. You are going to build and lead something. People are part of your problem solving, and you like that. It does something for you. That's part of your personality type. And to those folks that are out there listening, make sure that about yourself. And if you're that one that knows, I like to lead people, I don't mind hiring, I understand my own weaknesses, get off the sidelines, hire people, bring them into your business, because you're setting yourself up for success and you start fueling that other fire. There's something about people like yourself where other people are involved too. Once there's folks under you and you have that team, it gets you going a little bit harder and a little bit harder because you're a leader. It's what you do.
I think that's a huge point that a lot of people miss too, is that yes, you might be able to do some of those tasks that you don't want to do, but what it really does is it drains the energy out of you for the things that you're best at. So not only is it taking away your time, it starts to erode at your passion. And if you're passionate
Mm.
about what you do, man, you never want to let that go, because that really is the driver to scalability and success. So spot on.
Completely agree, man. It's got to pay that emotional paycheck. If it's only paying the finances, it's great. It's like, that's awesome to make a lot of money, but I know a lot of folks that aren't happy and don't like their lives who have plenty of money. Money's not their problem.
That's right.
And it's something I try to pay attention to in my own life. Like, okay, if you can still get there and feel that way, then how do I not take that path? How do I make sure I'm lining myself up with a life I actually want to live, knowing my own strengths and weaknesses, knowing, okay, I don't particularly like that part. I'm going to go over here and make sure I do this part. Because it's a lot of entrepreneurs get into the space and build themselves a trap. They never actually find that freedom that they were hoping to find by doing something on their own.
That's right.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
So take us into what you have more today. So you leveraged a background now into this commercial business, Sentinel Net Lease. What's it structured like now? What do y'all target? And what are you excited about for this year?
Yeah. So when we started the company, we were doing deals one by one. We would, me and my partner would put in the majority of the equity. We'd go syndicate the rest from accredited investors. And it's an interesting business. For a lot of folks that have exposure to just multifamily or just single family housing, commercial real estate can be intimidating, it can be daunting. Net lease is a nice entry into commercial real estate because it puts the responsibilities on that of the tenant. So property insurance, property taxes, repairs and maintenance, capital expenditures, a lot of things that are tough for an operator in multifamily, you really shift that to the tenant. And so it's a good way to have very consistent returns over a long period of time. And now we like to do single tenant deals because we feel that building has high utility. I don't have to worry about 20% of my building moving out every 3 or 4 years and managing that leasing. So we really try to focus on long-term, heavy duration leases where it's just really predictable cash flow. And we know that building is important to the tenant. So that recipe works pretty well. Now, the risky part is when you buy a building with only one tenant, if they leave, now you got a much bigger issue than a couple tenants leaving every few years. So it's important to have diversification in your portfolio. You're not going to buy every single tenant building in one market. You're not going to buy just fitness facilities or just grocery stores or whatever it is. You want that diversification not only from asset type, but also from tenant type and geography as well. So when you put together a big portfolio of single family properties like that, the diversification is great. And the likelihood of all of your tenants deciding to leave is pretty low. So it really operates like a much more well-constructed, balanced portfolio as long as you have enough assets in there.
When do you think that enough asset mark turns over? If someone's interested in this, thinking about this path, at what point did y'all find, or are you finding, okay, here's that consistency we needed. We're now getting up to enough units where this is doing it.
Yeah, I think if you're in that 8 to 10 building range, you're pretty safe. Because look, even if you are the strongest underwriter out there when it comes to these properties or these assets, you don't know what a tenant's going to do in 5 years from now or 10 years from now. And that's something that we learned over time, where we would have this great interview with the tenant when we were buying the building. They're like, oh, we're great. We're going to consolidate into this building from 2 other ones. And this is our forever headquarters. And, you're just talking to some real estate employee at that company. He doesn't know the vision of the company for the next decade. And so we bought a property with, United Healthcare in 2022, where we got sold that line by their corporate real estate team. And within 18 months, they started shrinking their real estate portfolio all over the country. And we're like, uh-oh. And on that one, it was a shorter term lease. So we really had a gun against our head. Now, luckily, we bought it at a very attractive basis. But they decided they wanted to shrink their footprint from the whole building to 25%. That's a nightmare for a net lease operator, because now you've got to go make a bespoke space for them in a portion of your building and then still go rent out the rest. So in that
Right.
scenario, we said, look, no, thank you. We Either you're in for the whole building, or you're in for none of it. And they were taken back a little bit because most people that own real estate, they don't really want to kick their tenants out. But in that scenario, it was better for us to sell the building in a desirable market to an owner user than to try to redeploy um, the rest of that space into a soft market. So you just got to be very thoughtful about the utility of that building and really understand what the worst case scenario looks like.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
What I really just heard too is stick to your guns. If the math is the math, be willing to tell that big player no, like, hey, sorry, can't do it today. And they're not used to being told that, right? But that's where in this business, you are there for your interests and your investors' interests. What makes the most sense to do at any given time? And having that kind of out and then taking it, man, that's it. That's how to capitalize. So tell me about the price ranges that you look for, because y'all found a unique soft spot in the market to start finding some good deals where you were telling me some cap rates earlier that you don't even start until it's at that number.
Yeah. So when we started the firm, we didn't have this larger platform in mind. It was just to put out some personal money. And so when we started looking at net lease assets, what you first think of, or most people think of if they know about net lease assets, they think of small retail, a Starbucks, a McDonald's, a car wash, maybe a Walgreens. And that land is kind of, I would call it unsophisticated investors, generally speaking, or people that are much more interested in tax efficiency than actual returns. And so
Gotcha.
I was not a fan of the return profile of those opportunities. And so I started looking upwards. And what we found was that in that middle market range of 5 million to 25 or 30 million, it was an area that was previously dominated by a lot of institutions. But as the institutions got bigger and bigger and their fund sizes went from 500 million to 5 billion or 10 billion, they had to deploy capital in a much more meaningful way. And so that asset or those dollars per asset had to grow. And what that meant was you were competing against a lot less buyers in that space, and it was a lot less commoditized. So brokers could not efficiently or consistently price those assets to the risk appropriately. And so we said, oh, well, there's some arbitrage opportunities here where, you're getting a high quality Fortune 500 tenant for a long period of time, but because it's in, Lexington, Kentucky, they're not quite sure how to price it. And so that's where we saw an opportunity. And one of the benefits we have, and the reason we're in 16 states is because we have these net lease assets, right? We don't have to actively manage these properties. Now, there are property managers on some of these, but they are paid for by the tenant, and we will coordinate with them on things just to make sure things are going the way they're supposed to. But you can have a much lighter internal staffing model and grow to where the opportunity is, instead of saying like, I'm going to be the king of St. Louis. That's okay. I'm sure there are guys out there that do that. They concentrate and it works really well. But for this model in net lease land, you can really be selective about where you go. And that has led us to where, if I'm buying an industrial property, the cap rate needs to start near an 8. If it's a retail property, it's 8.5. If it's an office property, it's typically 10 cap plus. And so those are cap rates most people are not even familiar with. They usually think you're just buying, some rusted piece of corrugated metal that's being held up with glue. And in reality, that is just where that market trades at, depending on the asset. And it's not an easy thing, because when you're buying a single tenant deal, you really need to underwrite the credit quality of that tenant. And so that is something that a lot of non-institutional real estate folks don't really have experience in. So you've got to you've got to really understand how to analyze the balance sheet of a company, understand its debt obligations. And that's just really one part of the puzzle, obviously, when you're buying real estate. But all of that factors in. And if you can do that well, the end result is you're able to buy these assets at cap rates and yields that are much better than what you see across the average in general.
And I find that so fascinating, and it makes complete sense though, especially how it kind of keeps your riffraff buyers out. They're not going to venture into the numbers when you start getting 5 million and up. That makes people a little bit nervous. And then you got this other group that just got too big to play there anymore. Spending 5 million bucks ain't going to do anybody any good in a $5 billion hedge fund. That is a
That's
lot of
right.
money to deploy. And so finding that space to where one, again, it goes back to your expertise. Just, and this is something I really love about real estate is we all can find our place in it. There's that place where your unique background and experience just leverages right into there where you can find a market, lets you dominate and exactly how you want to, right? Y'all are particularly keeping a lean staff to be able to pivot and move around the nation easy. And when you can play nationwide, that changes things. Nationwide investing is a lot of fun. I got to do it some in the single family world, but once you feel like you're playing with the whole US, you're just like, all right, what do we got here? I'm no longer, nobody's got me boxed in. You feel like you can find a deal every day almost.
Yeah, well, it helps. You get on enough broker. I get like 350 emails a day. So, I mean, the first hour of my morning is basically just sifting through that flow about what looks interesting. And, you know, we have some crazy numbers. I think last year we looked at like 13,000 different deals, right? That is,
Wow.
and we bought 4. So it's kind of crazy when you think about like we really are trying to be a needle in a haystack buyer, but when your haystack is the whole US, man, it is exciting because not only do you get to play in a bunch of different sandboxes geographically, but you're also getting market information and intel that can help drive decisions across what you're doing. So even if you don't win a deal in one market, you're going to know what that property traded for and you have that information nugget for the next one.
Right. It's all data. I view real estate as every day. Today's just practice for tomorrow. Every day is just practice for the next day because there's always a deal coming.
Yeah.
There's always going to be one as long as you're positioning yourself to get in front of that opportunity. That's why I like to tell people, go get in the way of it. Where is it happening? And just place yourself in its path. And eventually it's going to hit you and you're going to be able to take advantage.
Micah, that's awesome advice actually, because I think one thing that kind of first time entrepreneurs or investors that want to take that next step, they are so eager to get that done and kind of prove they're ready for that next level so that sometimes they fall in love with the deal that they shouldn't have. And, my first boss, one of the best quotes he ever told me was don't fall in love with a stripper or a spreadsheet. So it is it is sage advice on both fronts. I can attest to you. And so the problem is, sometimes you want to force these deals um, because of ego, because you think it's the right thing to do for the business. But ultimately, every deal has to stand on its own. And saying no is much more profitable. Saying no to a bad deal is much more profitable in the long run than saying yes to it.
I couldn't agree more, man. And we all entrepreneurs get that bug, especially in the commercial world, and specifically multifamily. I knew some guys not buying for a couple years, like just sitting. And to me, it's a great discipline. Good job, the ones that could pull it off, because one of my favorite quotes in real estate is we are deal finders, not deal manufacturers. The more you have to need this to go right, to need this to go right, to need this to get this big payoff, you are just inviting massive amounts of disaster in your life. The more things that can go wrong, the exponential probability they're going wrong. And that's in those markets or not knowing. It's a friend of mine, he calls it don't name the puppy. The idea of falling in love with the deal. Just don't. It is a deal or it's not a deal. And if you don't know what a deal looks like, that's your work. Go learn what one looks like, because then it's
Right.
just seeing, okay, it is, and it isn't. And that's where real estate has 2 rules, in my opinion. There's the game, like the paper game and the numbers, and then there's the conversations that you got to have. There's the people part. And the better you are at the game and the rules, the easier all those conversations get. You can just be straight up with people. And that's what I find is the best thing to do in real estate. Just tell them exactly what's happening. This is what's happening. I don't need to fluff it up. This is just the way it is. It's is or it isn't. What do you want to do?
Yeah, I think that discipline is really important too when it comes to understanding the best use of your own time. Because when you're really starting off or you don't have a clear thesis on what you're doing, you'll take calls with anybody. You'll explore deals you have absolutely no business talking about. Right? And I got guilty of this because my background's in commercial real estate. I spent my whole career in investment and development. I really have done just about everything. But should I be looking at a ground up hotel deal in Mexico? Probably not. But it sounds pretty damn sexy when you're talking to somebody about it. And you know what? When I'm like 70 and that's like my final swan or swan song of deals, maybe I'll take some crazy swing at that. But like that's not your core business, man. Just sticking to your guns is just so much more beneficial to not only your long-term success, but it's the proper use of your time as you scale your business.
I couldn't agree more. And you said earlier about saying no. I tell folks this too. Being an entrepreneur requires you to learn two things. First, how to say yes. And once you learn how to say yes, you got to learn how to say no real fast because there's endless opportunity. Right? I was listening to a Warren Buffett speech a while back where he's just talking about that. Like, I see good ideas. I can't tell you how many good ideas I see every day.
Right.
It's not about, is it a good idea or not? Does it fit what I'm trying to do? And so if you're in that early space of your entrepreneurial career, don't negate how much education is the first step. If you're not sure, take time to figure out the kinds you enjoy doing. You don't have to pull the trigger on a deal to kick it off. Actually take that time to learn. That's where meeting with someone about a Mexico hotel makes sense. Not because you're actually going to do it. You're just exploring. What does this actually mean? Does it line up with me? And once you do that, there's a group of men, we call it the CASE method. It's collect data, analyze the data, then strategize and execute. It becomes glaringly obvious when to strategize and execute, but entrepreneurs, that's our favorite part. Oh, it's a good
Yeah.
idea. Let's build a strategy and get that stuff going. Where you don't collect data and analyze long enough for it to
Right.
become obvious. Hey, don't do this or do this. And this has gotten me in trouble more than I care to admit because it's just like, this is a great idea. And I can see you doing this and this is happening. And then all of a
Yeah.
sudden there's an LLC created, like stuff's in motion. You're like, damn it, I did it again.
The reverse engineering is very dangerous for the entrepreneur. They're like, I have a solution. Now let me figure out the problem to get there. Totally agree. And I think, on that same token too, for LP investors, accredited investors, they need to go through that as well, because I think, especially in the last 5 years with the continued, expansion of social media as a marketing tool for real estate investors, man, there are a lot of shady characters in our industry. There is, the benefit to getting into real estate is there's a low bar to entry. The downside of real estate is there's a low bar to entry. So
Right.
you are dealing, as an LP investor, you don't know who to trust, who you're looking are their is the track record real? Is the strategy sound? To your point, where I look at other people's pitch decks, and the biggest glaring error I see is exactly what you talked about. These people must need to be a part of a circus, because the financial gymnastics in some of these pro formas for them to hit their targets are absolutely nuts. And when that gets passed on to an LP investor who doesn't know how to analyze the deal properly or assess the risks or even understand the variables at place, all they're seeing the headline IRR, and they're just, they've fallen in love. It's the puppy. And so I think it's dangerous on both fronts, both for the operator that wants to grow the business, as well as their LP investor who's trying to outperform the market.
Yeah. Cause I mean, that LP investor, you're selling them hope, and hope's not a strategy
That's right.
if at all. Right. And that's completely true, because to the secondary person, and this is where you were talking about, you're shifting now into where you're going to look for some more money, and it's requiring you to change the conversations that you have. And that's really the sign of a true master of their craft, is you can talk about the same thing 20 different ways. It's designed to who needs to hear it, what part's important to you, what actually matters. And there's a version for your GPs, there's a version for your LPs where they're understanding, hey, this is the reality of it. This ain't just, yeah, it's going to do good. You need to see this. And those are what generate those long-term relationships in real estate, which is what we're all after, because this is a relationship business. But before
Right.
we dive out, I want to dig in a little bit. What's that biggest thing you've noticed in that transition up in funds we were talking about? Because you're starting to look for funds kind of like that, the institutionals. You're growing a little bit. You need a little more money to deploy. What's that been like?
Yeah, it's been really interesting, and I would tell you the last year in our understanding of raising capital with larger investors is has been the most. I'd probably learned more in the last 12 months than I have at any point in the last decade, and it's been
Mm,
really interesting. It's our focal point now is we're finishing our first fund in the next 6 months in terms of capital raising, and most of that money has come in from individual investors, some small family offices, a few wealth managers, like we're on Schwab. That was getting our fund on Schwab was a learning curve in and of itself.
mm,
And something that once you do it, such a great calling card to go to people with because you're like, look, I am right alongside next to Blackstone and Apollo, even though my
right.
balance sheet is missing several zeros from theirs. Um, so so that part's been great, but now as we're looking at fund 2, we're saying, "Okay, well, how do we get pension funds and endowments and foundations involved?" And boy, I'll tell you, that is just a totally different universe, not only in terms of how you present yourself and your information, but the process overall. There's just a lot of gatekeeping in that space. So every pension fund that is out there hires an outside consultant to manage that process of investor selection and potential
Mm,
portfolio allocation. So you can't just go call the firefighters pension fund and say, "Here's my strategy." Well, you can, but they're not going to return your call. So save your time. What they're gonna do if they reply at all, will say, "Well, you need to talk to our consultant who will then put you into the queue, and then we'll analyze if you're the right type of fit for us." And so getting in to those consultants is a difficult process because you are competing against hundreds of other operators or fund managers out there. And as you might imagine, if those groups come from institutional pedigrees, they already know what these folks are looking for, and so when you
right.
go in there and you're like, you put the same pitch deck you have for a doctor or a dentist in front of one of these consultants, or pension fund advisors, they're not looking for the same thing. So you really need to tell your story in a different way. It has to be much more quantitative. It still needs that qualitative narrative about why this is a good idea, but it really has to have so much more meat on the bone from a data perspective and understanding not only how am I going to make money, but how am I going to mitigate risk if things don't go as planned. And that's really the biggest thing that I think I've learned over this process is speaking to that different audience of LP investors and understanding what's important to them. Because at the end of the day, even even when I like to think I'm this hotshot investment manager, I am ultimately a service provider. And so the service you're providing, you can explain it as much as you want to, but you need to explain why that service has value to that type of investor. And explaining that value to different audiences, it seems simple at the surface, but when you don't actually know what that person or that group is looking for, it really requires you to go in and dig deep and create a much more robust series of answers to the same question.
It completely makes sense, man. You're dealing in that's like high ticket sales. You're not talking to decision makers right out of the gate. You have to follow this process, which is tedious. Once you learn it though and get good at it, it has its benefits where now it is less emotional. It is less other things, which kind of makes it handy in a way, especially for some folks that don't like that part of the conversation. But it's just understanding the arena that you're playing in and how it's growing and how it's leveling up. And one thing I like that you said, how you're still learning. That is real estate in a nutshell. You're going to keep learning. And if you stop learning, you're not playing the game anymore. And it's what, in my opinion, leads to a lot of what you're talking about earlier. Just a lot of noise in the space from social media marketing, a lot of folks who are in serious trouble, actually, if you were to go look at their
Yeah.
business. They started selling you coaching because their investments are failing and they're trying to recover from something else. Or they did one deal, realized it was hard, and said, "Oh, coaching is way easier to sell. I'll just say I did this deal." And that's not real estate. That it's changing all the time. Like it's an active participation in it, which is really why one person can't do every asset class. It's impossible. You have to start niching down, because if you don't, your clients don't take you seriously. You're not going to find good deals. It requires you to have that focus.
Yeah, absolutely. And when you do see groups that start to do multiple asset classes, it's because, to your point, they've thought like an entrepreneur and they've brought in specialists to run verticals across the board, right? So you see that with
Yep.
large institutions that are running different strategies. They really have point people over industrial and one over multifamily. And it is it is that true team concept how you get to that scalability across asset types. But as an emerging manager or an entrepreneur, like, you really have to be very focused on what competitive advantage you bring to the market, and be able to present that in, I think, a sophisticated manner where people understand, oh, okay, this is why he's doing what he's doing. And the coaching thing, man, I couldn't agree with you more. If you ever see me coaching anything, Mike, I give you permission to kick my ass, because that is the farthest farthest thing away from the best use of my time. And if I looked at the most 1,000 profitable coaches in the world versus the 1,000 most successful real estate guys, it's not even freaking close, right? In
Hey,
terms of your ability to create wealth. So I agree. And I think, look, there's forums like this where you have guys that are sophisticated, that are doing things well, guys that, started from nothing and built something, guys that came from Wall Street and are doing well. There is so many great examples of a playbook for people that you can follow where we're not charging anything, right? We just want
right?
to help. We want to help the community in general. At least that's a big part of my mission. And I think a part of yours in doing this podcast is, like, look, the whole market benefits by having smarter participants in it. So let's pull that average up, not drag it down.
Exactly. The better we all are at this, the better everything gets. It
Right.
benefits you to get good at what you're doing. Um, I I always tell people, you want to be a good human being, get good at being human. It's a skill set. Learn
Yeah.
how to do it. You have all this capacity at your hands if you will just train yourself on how to use it. And back to your point about staying focused before we wrap this up. One of my favorite things I like to point out and remind myself, Amazon only sold us books for 9 years, only sold us books. Now they sell us everything. The benefit of that focus up front to just absolutely own what you're in creates that ability to do these other things where you're not risking everything to do it. You are actually building and scaling responsibly, using economies of scale, and not just, I want to grow big as fast as I can, because that's where we run into some issues. But Dennis, so man, I loved your story today. Thank you for being with us. For folks that do want to follow along with you and learn more about how you're doing this, where can they find you at? What's the easiest way to reach out to you?
So I would say follow me on LinkedIn. That I post a couple times a week, and a lot of it is although I will give market commentary, a lot of it is really about systems building, infrastructure, practical investment decision making, and utilizing the right technology and systems to grow your business. I also highlight a ton of mistakes I have made throughout my career, because let me tell you, I've been doing this for 25 plus years, and I've either seen or most likely done just about everything wrong that you could do over that period of time. But I am more open to share what not to do in a lot of scenarios. And I think for anyone that's an owner, operator, entrepreneur, hopefully I give a lot of valuable advice there. And then if you're an accredited investor and you're looking for unique investment opportunities, you can learn more about our fund by just going to sentinelnetlease.com, where you can download our fund investment summary, learn about our strategy, our portfolio, our team. And we'd love to have a conversation with you. And if not, that's okay too. I will tell you, one of the best things about when you start scaling your company, and hopefully you have this strategy early on, it's okay if people don't want to invest with you. It's okay if people want to
Right.
do something else. You just got to keep discipline and doing what you're doing, and ultimately those results pay off in the long run. But I'm probably the worst salesman for my fund that's around, because I don't really care if anyone invests or not. I just hope they can at least understand why I'm doing what I'm doing.
And that's where your vibe attracts your tribe, man. Some will, some won't. So what next? That is my sales philosophy. It's not about me. And when you have something that you believe in, then you become the gatekeeper of your own company. Yeah, that's what you're truly doing. You're seeking fit, not just funds. Because once you have the fit, then you got repeat funds. Then you got people working with you for a long time, which that's what grows business over the long haul. And Dennis,
Yeah.
again, man, thanks so much for being with us. I really appreciate your expertise, the information that you shared. For those of you listening out there, please check out the show notes, find Dennis's links, follow along with him, learn from somebody who's actually doing it. That is the best advice I could give. The folks that are doing it, they're typically happy to share with you what's going on. Follow along, take advantage of that. If you're an accredited investor and wants to learn more, touch base with them. Be a part of something that I think's been pretty cool to talk about so far. Again, Dennis, thank you. Everyone, if you got value out of today's episode, like this episode, share it with someone else you think could get value. As always, please don't forget to subscribe. We appreciate every single one of you that's following along with us out there. We've got more conversations coming up with operators just like Dennis, out there building something real, changing their own lives and the lives of those they're working with. Thanks again, Dennis. We'll see everybody on the next episode.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.